Our driving season is winding down. There have been no major hurricanes so far, and OPEC is reporting that global demand would ease over the coming months. Have we seen oil prices peak for a while? Michael Lynch, president of Strategic Energy and Economic Research, says the market is running out of steam. Craig Smith, author of Black Gold Stranglehold, says, you know what? Many of the underlying tensions that drove prices up in the first place have not gone away, and prices will rise. Craig, I was hoping you wouldn't say that. But even so, in light of all of the challenges that have been thrown at oil recently that still couldn't push it to $80 a barrel, you still feel it would go higher? Why?
Yeah, I really do, Liz. I mean, we got to keep in mind we're still at war. I mean, we've got a showdown coming with Iran. Iran's pursuing nuclear weapons. They're one of the top 5 oil producers in the world. Consumption continues to increase. I mean, in 2002, we were using 78 million barrels a day. The first quarter of 2006, a little over 85 million barrels. You've got hurricane season that's on us. You don't have all the damage repairs done in the Gulf just yet. I think it's a little bit premature to start popping the corks on the champagne bottles that oil's going back below $70 or $60 a barrel.
Michael, I'm easy on this one. Craig just convinced me. Can you change my mind?
Yeah, demand growth has dropped very sharply. It looks like it may only be up about 1% this year. Supply, despite all the problems, is doing better. We've got new fields coming on. The Baku-Shehan pipeline just opened up. Big field off Australia just opened up. Inventories are rising. OPEC spare capacity seems to be rising. So, you know, the fundamentals are basically getting a lot more bearish month by month, and I think that's going to outweigh the geopolitical threats by the end of the year.
And Craig, add to that concerns about the Prudhoe Bay debacle. That didn't seem to be as bad as expected.
No, that was good news, Liz, but I tend to disagree a little bit with Michael in so much as that anything can disrupt the flow of oil tomorrow. If you have a problem in Iran, what about Nigeria? What about potential pipeline disasters with the jihad is not over on behalf of the terrorists. They're looking at the Saudi pipelines. And while I agree for the moment, geopolitical tensions are probably easing somewhat, that can change tomorrow. Unless Osama bin Laden puts in his resignation tomorrow, I'm going to stay long the oil market.
Michael, I was talking to an airline chief, let's put it that way, and he flat out told me, look, if anybody wants to see oil prices go down, it's me. But we are so terrified that, look, Craig just called it the jihad, saying it's not over. One strike at someone at a country like Saudi Arabia, and that's not entirely out of the realm of possibility, that might send oil shooting to above $100 a barrel.
Yeah, it could, but that's such a small probability event. And, you know, I mean, it's been 5 years and they haven't been able to stop one barrel out of Saudi Arabia, despite Osama bin Laden's call for that. And there are downside risks, too, as we just saw in London last week. So, you know, you have to weigh off the various probabilities, upside and downside. And then just remember, it's not just the risk of disruption, it's how much replacement supply is out there. And with inventories getting higher and higher, there's a lot more ability to offset some kind of short-term problem or small problem, as in Alaska or Nigeria.
The numbers that I'm looking at from the EIA don't indicate huge amounts of oil still available to us out there right now. Michael, we're producing about 84.6 million barrels a day. If I remember correctly, the first quarter of 2006, we used 85.15 million barrels a day. So while you're optimistic, and I hope you're right, I tend to believe that think about what would happen if Ahmadinejad tomorrow was going to suggest that he would do something in the Straits of Hormuz. Tanker rates would go through the ceiling. I like your optimism. I just hope it's not misguided given what we're dealing with in the Middle East, where most of our oil comes from.
Well, we've been facing these kind of Middle East problems. I mean, the Iranian disagreement, shall we say, has been going on for about 6 months. There have been a number of threats, and they've generally pushed the price up a little bit.
Well, Michael, you know, we just showed, I believe that was that a 10-year chart or a 20-year chart? Mm-hmm. A 10-year, it's like this. I mean, with a few bumps and bruises, it's still consistently moving higher with that fear hanging over the markets constantly.
Yeah, it's been moving higher. You know, we're still, I think, in the bull market. We've been nibbled to death by ducks with all these small problems for the past 2 or 3 years. You know, nothing compared to the Iranian crisis. But they're all starting to wear out compared to the fundamentals.
Liz, this time last year, the end of August, we had oil spike up to $70 a barrel during Hurricanes Katrina and Rita. Then you saw it drop all the way back down just below $60 a barrel in late November, and then shot right back up to almost $78 recently with all the tensions.
Craig, will we ever see $30 a barrel again? Ever?
Boy, I just don't. I can't see it, Liz, unless you see the U.S. dollar regain all of its strength that it's lost in the last 30 years. Then maybe you'd see it. But I don't think with a weakened U.S. dollar and with all we have going in the Middle East, I just don't think this is time to be optimistic. And
Michael,
that's why
last word. Will we ever see $30 a barrel?
Yeah, I think we will. Maybe not in the next year, but I think we'll probably see 60 a lot sooner than we'll see 80.
Head. You know what I think? I think we all, if we drive, hope Michael's right, but most of us are thinking realistically Craig might be. We'll have you both back on soon. Thank you.
Thank you.
Thank you so much. If you're